Hi, everyone. This is Tandra Bowers with the Home Experts for You team of Keller Williams. So I'm super excited to have Megan Munley with Movement Mortgage on to speak with us today. I am talking to buyers that I've been working with recently, and we really want to know where the market is headed. And I think Megan's a great resource for us. I know she is. And also, I would love to hear, what is winning offers out there today, and where do we think the market's going to go as far as mortgage rates? There's so much to talk about in so little time, but we're super excited to have you on today and give us the scoop, Meg.
Hey, so I'm Megan Munley with Movement Mortgage. I am a local mortgage lender here in the greater Philly area, and I've worked in the mortgage industry now for just over 11 years at this stage. So we have seen, Tandra, as we've seen in the past, this market is moving with an ebb and flow. And so 2022 is really off to a bang. And we're going to see some big changes happening within this year. So I think it's a really good time just to chat through what predictions are out there, what that can mean for you if you're looking to buy or do home improvements in the year, and really how that impacts you. So one of the first things that we were talking about was just kind of what's going on with interest rates. As you've seen, just within the last few weeks alone in January, the markets have moved really quickly. Predictions going into 2022 were pointing out that interest rates could be anywhere from around 3.5% to 3.75%. And this is based off of really important data that comes from the Mortgage Bankers Association, Fannie Mae, and Freddie Mac, and then even further looking at the National Association of Realtors. So these are some really great institutions that are giving us their foresight into what's happening with markets. And we're really starting to see that come into play very quickly as we enter into 2022. So interest rates are going to be a really important topic that people are going to have this year. And I guess the most important thing that we could really talk about is putting it in context. With what's happening with the interest rates, we are already starting to see that they are in that mid-3 range. And you're going to see rates fluctuate. With the volatility that's happening not only in the mortgage interest rates, but also within the stock market, you're going to see that that's going to change on a day-to-day basis. So whenever you're preparing to purchase, I think the really important factor to consider is just knowing that the market is the one thing we can't predict. We can go with it conservatively and make an idea of how that's going to impact your monthly payment for a mortgage. But just knowing what's going to come ahead can really help to prepare someone best when they're looking to make a big move.
So when you're having these conversations, and someone wants to buy in the next, 90 days, we don't know where that rate's going to be, but how many rate hikes do we think we're going to see? And the question is, now's a good time to buy, but where's it going to be in 6 months from now, a year from now?
Right. So I liked that part that you brought up with rate hikes. Rate hikes always seem to be the question for buyers. Are rate hikes going to impact what my mortgage interest rate is? It's really funny to learn that actually doesn't have a direct correlation whatsoever. So one of the things that we're seeing that's impacting interest rates right now has to do with the Federal Reserve's monetary policy and what they've been doing over the last 18 months now, basically since March of 2020, going on close to 2 years now, would be with the funds that they have available. They have been investing into the bond and the treasury market. And that is what really impacts our interest rates. So with doing that has been what has kept these interest rates lower over the last 2 years now. What we're starting to see is as the Federal Reserve's monetary policy came out going into 2022, their discussion is that they're going to start tapering or doing something called quantitative easing. And that is the big question that set the markets both treasuries and stock markets into kind of a pandemonium at the beginning of this month. They just weren't sure how to take that. And so interest rates for mortgages reacted accordingly. So what we saw is that interest rates moved up into that mid-3 range from the low 3s, high 2s. And we saw that that happened pretty quickly. Now, what's interesting to see is that as the Fed actually starts doing some of this tapering, which is expected to happen in March, predictions are actually coming out that that's actually going to push interest rates back down, because typically markets are going to react favorably when the Fed actually starts tapering those funds and when they start doing those rate hikes. So the mortgage interest rates, which are based off of the treasury bonds, are actually going to react favorably to it. Now, what do those rate hikes actually impact? That's going to be the cost of money for the Fed lending to things like banks and other institutions. So that could impact things like your auto loan. That can impact things like small business loans and even the credit card interest that you pay. That's really what's going to be impacted by those Fed hikes, and not necessarily a direct correlation from the interest rates themselves.
Mm-hmm. So do you think that you've seen buyers more cautious out of the gates this year, or, you know, are you readjusting what they feel comfortable, you know, purchase-wise because of these other things that may affect, you know, just in general what they're already paying for other loans that they have?
Absolutely. I think that that's something we should always be looking at. When you're thinking about purchasing a home or when you're thinking about selling your current house, you've got to be looking at your total overall budget, right? Because ultimately, I'm not just looking at what you're paying in a mortgage and a monthly payment. I'm looking at all your other expenses, because your mortgage, that's going to be one of the largest debts that you have in your entire life, right? And so it's important not only to just manage where that is, but also your overall financial picture, right? So taking into consideration what are the other expenses that you have there, and really factoring in that, hey, if I'm going to be moving up house and I'm going to be taking on a higher monthly mortgage payment, what else am I spending money on that I can maybe clear out, right? That's been a really important factor that we saw in 2021, and even in 2020, where we were able to look at someone's equity that they've had gained over the years and then been able to take some of those funds, apply that towards some of the other debts or liabilities that someone has. Maybe it was a home equity loan that they did to do some construction on a property, or maybe it was money that they needed for a student loan for a child. Maybe it was credit card debt that just added up as kids started coming along and expenses started coming along. And that was one of the most amazing things that we were able to do, is restructure that. So when we're looking at buyers that are looking to purchase within the next 12 months, 6 months, however long that time period is, the sooner we can sit down and build that financial strategy, which is the process of the mortgage pre-approval, the sooner we can do that, the better. Because at that point in time, we're looking over the full picture. We're looking over the equity, which is just going to continue to build this year, right? And from there, we're going to be able to see, okay, what can we take care of that is going to put us in the best financial place so that when we purchase our new home, that monthly payment's not going to scare us. And what else is there that needs to be taken care of that really just cleans up our whole financial objective?
Got it. So another question for you, and then we'll wrap it up. What are you seeing now that wins offers when your clients are going up against, you know, maybe multiple offer situations? What are some things that you are seeing that are getting that offer, you know, to say yes?
Who you're working with is key, right? I think that probably is the number one most important piece to getting an offer accepted. Making sure that you've done your mortgage planning early. One of the things that we do for our buyers is we have a calculator that they can go into and continuously be looking at their monthly payments so they know whatever that offer is. If I've got to offer 20,000 or 30,000 more, because honestly, that asking price, that list price, we're seeing that's more like a starting point right now for negotiations. That's not a point where you're negotiating down from. It's almost just that starting point of where to go. And that's where the expertise comes in from the real estate agent that you're working with and your mortgage lender. So knowing your numbers, understanding how much flexibility you have in that monthly payment, understanding the flexibility you have in the funds to close, knowing that you don't need 20% down so that if you need to stretch that money elsewhere, some of the conditions we've seen on contracts now are where buyers are willing to pay sellers' closing costs. Buyers are willing to pay the full transfer tax for the seller, which could be 1 to another 2.139% if we're buying in Philly. These are some of the expenses that a buyer is willing to take on to edge out other offers. Buyers are willing to pay differences in the appraisal value. Buyers are willing to pay the seller's commission on a property as well, or a portion of it. So there's a lot of little things that you can do, and when you're speaking with an expert agent, you're able to come up with a plan that's going to set you apart in the best way possible for a person's particular finances. So if you don't have the ability to come up with a difference of 20,000 on an appraisal, then that's not an offer that you're going to make. But what else can you do? And so having that discussion, getting prepared, and knowing that you're going into this not with a negative thought per se, right? But just knowing that you're going into this realistically. And right now we're seeing buyers on average probably making about 6 or 7 offers before they finally get under contracts. Would you agree?
Yeah, absolutely. That's a great point to
So
bring up.
knowing that going into it,
They're not alone.
yes, knowing that going into it is almost like, okay, this is practice. So we love this house. Wouldn't it be amazing? Yes, but try not to get emotionally attached and just understand if this offer doesn't go through, I absolutely promise you there's a better house for you and there's a reason why it worked out this way, but you won't know this until you officially find the right one. And so it's just preparing people best to know that, like, hey, you will possibly make multiple offers. And one of the big differences we do with our buyers is we're going to reach out to the listing agent. So for example, if you send me a text message on Sunday, which I got one last Sunday, where a buyer's agent said, hey, Meg, I need you to call so-and-so and just make sure that they understand how qualified this buyer is in particular. The agent specifically told me, hey, this person has 3 offers already in, another 3 expected, and offers are due by 8 p.m. This was Sunday at 1:42 p.m. in the afternoon. Buyer already knew their numbers. We had their calculator. She could play around with it and make sure that her monthly payment made sense depending on what price that she was offering. From there, we made the phone call to the listing agent just to ensure that they knew who the lender was, who the buyer was working with, how we can assure that the loan process is going to go as smooth as possible for them. And then just understanding we've already directly verified their income, their assets, the information that it takes to get a full approval from underwriting, and just explaining to them how quick our underwriting process was. So the most exciting thing for me was getting a phone call yesterday morning at 8 a.m., learning from the buyer that, hey, there were actually 8 offers that came in and her offer was accepted because we made that phone call, because we prepared that buyer appropriately and built the offer knowing how competitive we need it to be.
Right. I love it. Well, thank you, Meg. We could talk for days on this topic. It's good to kind of start 2022 with a perspective here, and sounds to me like it's going to be a busy spring. You've seen probably a lot of pre-approvals coming your way already. So if you want further information, you know where to reach us. My number is 215-680-4652. Meg, go ahead and give your info.
Yeah, so my number is 215-833-7064. And our information is obviously going to be on the email below so that you can reach out to us in any way, whether you want to text, call, email. We are here for these questions, understanding what's going on within the market, what's expected to happen is going to be key. And just being prepared and working with the people that can actually keep you up to date with what's happening as it's happening.
You got it. Thanks, everybody. Take care. Bye.
This is Megan Munley with Fairway Independent Mortgage Company, your local mortgage lender right here in Conshohocken. I wanted to share with you one of the most important tips when you're looking to purchase a home. Whether it's your first home, your vacation home, a new home, or an investment property, you don't need 20% down to purchase that house. There are mortgage solutions with as little as 3% down, even in the jumbo category if you're looking to purchase a primary residence. The most important thing that we can look to do is find the solution that is going to fit your goals based on a monthly payment and what you'd like to invest initially in purchasing the home. From there, we can find solutions that may have mortgage insurance non-existent from the beginning, or options that allow you to purchase that mortgage insurance upfront at a fraction of the cost and not have to pay it on a monthly basis. What a great savings that can be. If you or anyone you know has questions about the mortgage and financing process, I would be happy to answer those. Please don't hesitate to reach out.